Hello, traders. It's E from MarketWizards.com and eMiniWizard.com. About quarter after 3 on the 18th of March, a Monday, 2019. Reminding traders to use risk capital you can afford to lose if you are playing this game. And while you're checking out our site, don't forget we've got a couple of specials coming up. You may want to take a look at those if you'd like to learn more about how we trade. Here's a look at angels and demons. We thought that anybody that was taking a long this afternoon would want to make sure they were paid by 36.5 to 37.5. 37.5 happens to be our demon today, and it's also a dime off of the low. So we thought for sure anybody playing long side, if you got that far, make sure you got paid. Thought perhaps that would cause a little bleed back, and anybody wanting a second short today, that would probably be the best location to try it. And if it doesn't work, take your stop out. Original thought this morning was probably make one more high anyways, try to catch some late longs. Market did that absolutely beautifully this morning. We thought the 42 to 45 were legitimate targets, but risk reward would come in and don't hang out. Anything we got above 36.5, which was last Friday's high, was a good fortune. And our resistance at the time we'd posted was 38, and we moved that back into the 42 zone today and said, got to acknowledge that the boys held the 24s, that 23.5 low on Friday in the afternoon. So let's use that as our aggressive support, trying to hold. And that worked out pretty well for the long side. Anybody took the long side push in the morning to test for resistance. And then obviously anybody who took our resistance zone to come back in and try to get back into the 32s, that was our primary idea, get back into the 32s, and then obviously lucky if we can wash out the RTH low and still do an intraday range type trade. So the lunch trade, really, the contra was actually a trend trade with the last swing we've had, and obviously with the overnight range. So buyable, and that contra actually went with the range and the trend, but we didn't think it was for a new high. Here's the NQ. We had taken a look at this earlier, and we posted, the potential targets here at that 80 area, just above it to 87. Felt that anything that you got above 75 was good fortune. And likewise down here, we felt anything you got below the 25 zone was good fortune down here. And this buy we thought would get back to the 456. Here's your 4 back here at 50. We call the 50 to 51 area. If you got there, then the next good fortune area would be to retest this break right here, this 57.75, which would be part of obviously the core, or what we call the pipe. So anybody that's got that in this swing back, that should be a profit-taking area. And then last hour is up for grabs, obviously. So we've been using this chart to help gauge the strength of ES as well. Quick view of the monthly chart. And you'll note this 2669. We pointed that out in our room and said, let's use this 27 idea as an OTF, big boy support idea. When we were coming back this morning, we said, make sure you understand this level. Very important to look at OTF traders and what they're thinking. And here's to today's predictive model, and you can see our back end is 41.8. The aggressive extreme areas behind that that longs are looking for will be found back there. We've got them on a spreadsheet as well. And then obviously we thought today the 32 basis this chart was the flipper. We felt that this would be a very important idea today, the 32 range. So we've kind of monitored this. We noticed that this was near that 33. Remember that 33.25 we said that we want to see if we can get above. So now we're trying to monitor not only that 36, but also that 33.25 area that we had busted above on that yearly chart. So we're going to pay attention to that. And we've got Fed up idea. Obviously, Wednesday we'll have a Fed announcement. So usually we like to see the market bouncing into that. At this level, we're a little skeptical about a huge run from here upside. So yeah, it's 1 foot on a banana peel. Anybody is playing alongside, truthfully. 10-minute chart in play. I love the way this has responded. It looks like it's in an up channel. As long as we're above this magenta colored line, it's still positive. We note that we're going over and under, but still generally it's been positive. And as long as we're holding it above this, we're going to assume that it's still a squeeze type trade long side. There's a 15-minute chart, RTH, that we have been looking at, and as long as this is in play, we're going to keep our eye on it. Normally, we're going to use a 5, but this chart has been working, so we're going to keep our eye on it. Seems like the big boys are playing off of this time frame for now. And everybody's favorite buzzword, the order flow chart. Still keeping an eye on this, learning from this, but truthfully, this is secondary to the work that I've done and have done for years. One of the things we pointed out to our traders today was, and very early on, was the idea of getting our VIG, getting our, as Tom Hopkins, a real estate agent, used to talk about, when you are working for a salary, it's one thing, but if you are working for yourself and there's no guaranteed income, you've got to figure out your daily nut. But what is it that you need to continue as a business, in using trading as that business, as opposed to, say, the real estate brokerage? And the idea, in my opinion, is that if traders could learn how to get their 4 to 5 points per day per contract, great. And while you're learning, even if you only got half of that, if you're able to do that using a couple of contracts and we're able to scrape out your 4 or 5 points a day, after a while you would get better at this, and then with the scaling up process, you'd be able to bring home more. It'd be like working with 5 clients at the same time instead of only one. So that's the analogy that I'm trying to use and help our traders understand the importance of understanding what we need. And I think the average guy, unless you're living in California where the prices are so extreme, the average guy, if he wants to earn his 50K a year, then you're going to be able to do that with these type of numbers. And obviously, if you get better at it, then the scaling up, you don't have to change a thing. You're looking for the safest trades, the ones that make the most sense, the ones that you can hopefully find those 4 or 5 points without a big drawdown. Because in reality, the key is, can you make your VIG before you get stopped out? And you get stopped out a few times, you lose the right to try anymore that day. You just have to pack it up and say, okay, I'm off today, and I'm going to have to, come back tomorrow. So a little bit about the philosophy and the things we talk about behind the scenes that really never get shared necessarily with the public. It's too easy for a trader just to throw out there the ideas of where the market's going. But how many contracts are you playing? What is your maximum allowable drawdown? What times do you try to avoid? We felt anybody had a good morning in the primary trade should avoid lunch. If you want to trade lunch, and take the contra, better odds for the bounce, stay inside. So part of trading is understanding the rhythm and the timing and the risk and reward. So these are the things that we talk about. Anybody that's interested in learning more, we do have a course coming up, and look for that, sign up. Doubtful that you're going to find more value for your money, but if so, let me know about it. All right, be well. Hope you're having a good day.